Alright guys, welcome back to the channel. Thanks for tuning in. I'm going to be going through a video on different types of entry orders that are going to be really powerful for you to add into your trading system that are going to allow you to be a better trader and make more money. I'm going to be going through conservative right through to aggressive and how you can dynamically implement each so that you can not leave money on the table, so that you can be right much more than you're wrong, and have great reward to risk profiles. And I'm going to tell you when you can use these for optimum performance. So stick around, let's get stuck into it. All right, so as this is an educational video, everything I show you is obviously going to be in hindsight, because I'm going to give you real examples of what has played out and how you can kind of take these examples and apply them to your own trading immediately. I'm actually going to give you 5 different entry techniques and things to consider when you're developing as a trader. And you can go and take this from this video and you can go and test them, and you can go and find, how profitable they actually are and what one suits you the best. So I want you to think about these entry techniques as levels of aggression, in terms of like the first one being very aggressive, meaning you're getting straight into the trade. No, you don't have to wait for signals and all the rest of it. It's just straight into the trade, right through to the most conservative entry. And I'm going to give you the benefits and drawbacks of all of those. Obviously, the more aggressive you get in, the more opportunities you're going to get, but the less you're going to be right. Okay, it doesn't mean that it's not going to be profitable, but some people have this thing where they like being right more than they're wrong. And then, of course, if you're ultra conservative, you're not going to have as many trade setups, but you're going to be right more than you're wrong, much more than you're wrong. So I'm going to give you a whole list of ways to approach the market so you can go and test these and see what one suits you. The first one I want to talk about, it's all going to be structure trades, okay? So what I mean by structure trades is, you see this green horizontal bar here, this rectangle. What we're looking at is pretending this here was the market condition. We're currently pushing into previous structure resistance, which you would have learned on my previous video. So whenever we're approaching previous resistance, we look at the market and we're looking to short for a structure-based trade. And we don't want to be greedy, we're just taking a small profit off of the table, and we want to short the market when we test that level again. Now, the first order would be a limit order, a sell limit order, which means we just draw out our zone here on the time frame, on the higher time frame, and if the market starts pushing up, we just put a limit order, a sell limit order in that zone. All right, so you can put it at the start of the zone, which in this case is the highest close. Or you could put it somewhere in that zone. And basically you're telling your broker that if we push up and test that level, I just want to short the market. I want to sell at this position size, whatever your position size is. And if you do that, you're going to have a lot of opportunities, but you might not be right more than you're wrong. Okay, so you want to make sure that if you're not right more than you're wrong, that your reward to risk profile is going to be in your favor, because you don't want to be wrong more than you're right and have an inverse reward to risk profile. You want to make sure that when you do win, you make up for all the other losses. So you might look at getting a stop loss above the previous high quite tight, and then targets at previous structure, like in here, or basically you're looking for the least path of resistance for that target and the most path of resistance to the stop loss. So whatever you can get away with, ideally you want a 1.5 or a 2 to 1 reward to risk profile on that particular setup. The next one, so let me just show you, so that's pretty self-explanatory. The next one would be, okay, well, I don't want to set a limit order. I want to wait and look and watch the market to see how the market's reacting, and then I want to place the order once price action's given me some kind of clue or signal that it's likely to roll over. All right, I hope you're enjoying this video so far. Just before I go into some examples on the chart, be sure to check out my Trading for Beginners video. It is a full-blown 2.5-hour tutorial on how to trade from start to finish. It's had hundreds of thousands of views since we posted it, so I'm sure you're going to enjoy it. Check it out and let me know what you think. And the very popular one that traders use is something called a 3-bar reversal. Now, just to show you that before we take a look at some of these, a 3-bar reversal would be where we have a green candle pushing up, okay, and then you have something that looks like this, which would be kind of a doji candle or an indecision candle where we pause and the market even better if we put in a high test wick, and then that's usually followed by a candle that then closes below the low of this middle one, right? So you've got candle 1, candle 2, candle 3. That's why it's called a 3-bar reversal. The third candle is normally red. Excuse the thunder outside my my window there. And as long as this closes below the previous low, that is a 3-bar reversal. And we only look for these at the top of structure. So we'd look at these here. Now, if I drop down to my trading time frame, you can see, did we get a 3-bar reversal here? We actually didn't. So this is the limit order example. However, if I go to one of these other markets, you'll see right here, or let's just see if there's a better example. I think there was one on the... Here we go. So we go back out to the daily. Go back out to the daily on the... There's been lots of these trades this week. It's been great. Go back out to the daily. You can see we've got our zone on the daily, right? Go down to our trading time frame. You can see we're in that zone. You can even narrow this up if you like. And look, market's pushed up. And this is what we call a 3-bar reversal. We've got the big bullish candle on the way up. We've got an indecision candle with a high test wick. Okay. And then we've got a third candle which closes below the previous low. And what you would do on that situation is enter as soon as that third candle closes. Okay. So as soon as this closes, you watch. Why do we wait for it to close? Because it might not be a 3-bar reversal. We might just push up just before the close. So the whole point is the probability in the pattern. So you have to wait for the pattern to complete, and then you would place the order right on the open of the next candle. Okay, that's called next bar market. So in this case, 63.42. And again, you'd be placing stops at structure. I wouldn't be looking lower than this structure level in here because it's also tested here. So my risk reward profile on this would look something like this. I'd get my stops above that high, and then my targets would be at structure. And again, if it doesn't work out risk reward wise, then I don't take the trade. So that's number 2. Number 3 would be a bit more conservative, and instead of waiting for this 3-bar reversal and just going, right, I'm going to short this now, instead you look for a retest, which we call a double top. So you're waiting for the rollover, then you're waiting for a push back up. Now let's just see if we can get an example of where this happened. And there's one right here that played out on the pound yen, sorry, and I think there was a 4-hour time frame one this week on the pound yen. Yeah, so we got a retest here, right? So look, this is the pound yen, same thing. We're approaching previous high. We push up, big bullish run. We know that doesn't go on forever. You see the RSI went over bought, and you can check my video out if you want to find out more about how we use RSI and things like that. But look, we had one test, and then we pulled back down, then we did another test, and we didn't violate the high. We didn't break and close above the first high. And this is what we call a double top. And it's still in that zone, so it's still valid. We've got divergence on the RSI, which is another nice little indicator. But what you're essentially doing here is you're waiting for one test. You actually see there's a 3-bar reversal here as well, but we didn't get involved in the 3-bar reversal. We waited for another test of the high, and we waited for that to close but not violate the previous high. Wow, the thunder's going nuts. And at that point, you enter on the next bar market of the candle that tests the previous high. All right, so just to show you that really, really clearly here, we can drop down to the 60, and you can see that we dip down, and then we push back up, and this candle here tested this initial high, but didn't close above it. So you'd get your stops above, maybe an average true range value above the high. Again, you can go and reference my previous video on that if you don't know about average true range, and then we roll over. And the more conservative you are with entries, usually the more you're right, obviously, but the reward to risk profile, it will depend on how you take your targets. Now, the more aggressive you are, in theory, the more aggressive you enter the trade, the more high probability, more aggressive the move should be. But you don't know that right now. You only know that through discretion and going to test this stuff. So you want to play around with reward to risk profiles. You want to make sure that the aggression level suits you. And I'll talk to you a little bit about how you can do that in a moment anyway. So that's the third entry. The fourth entry is even more conservative, and that is waiting for a double top and then waiting for what we call a 2618 or a triple test. Some people call it a kiss of death style setup. And what we're doing there is we're essentially waiting for, let me draw this out. Okay, so let's just say that, let's just see if we can find one here. Yeah, this one hasn't played out yet, right? So let's pretend that we're looking at the dollar yen. And in this instance, the market starts to push up into our zone. And we've already drawn this zone on, okay? This time we want a double top. So I'm going to bring on this trend line. And we're going to say, right, this time the market needs a double top. But not only a double top, I'm going to wait for price to break and close below this retracement. And then I'm going to wait for another test, okay? Now, some people wait for a test of this high, and some people use what we call a 2618 setup, where you bring on a Fibonacci retracement and you go from the high of the second test down to the retracement low, and then you're waiting for a push up into that 618, which is the golden ratio in Fibonacci language, and then you set a limit order. You can just set a limit order at that because it's the most conservative entry, so you can use the most aggressive entry order, right? So that's the fourth way. And typically with a 2618 setup, you are getting a 1-to-1 reward to risk, because what you're doing is you're taking targets at a retest of the low. Now you can be more aggressive with that and you can play with that, but for kind of conventional starting point, you're looking at a retest of the low, which means if your stop's above the high, it's normally around a 1-to-1 for a 2618 approach. That's number 4, right? I think. So the fifth one would be discretionary patterns. So these are things like ascending channels. So we had an ascending channel. I took this trade, I put this out on my YouTube channel about a week ago, where I was looking at this, and we had this ascending channel where we had, you know, a rising channel, we had divergence on the RSI, and I entered up here and shorted this down to the start of this channel. So I took my profits off here, which I obviously left a lot of money on the table, of course, and that happens and that's fine. But the discretionary approach would be the final approach, and that's where you're building your own kind of patterns into an entry technique, and that comes much later down the line. But I wanted to give you these 4 or 5 ways to think about how to get involved with trades. I've just shown you that they all play out, right? So there's multiple different ways that you can get involved. So what I'd love you to do is go and play with them and let me know how you get on. And if you trade these a different way, let me know in the comments. Let me know any other ideas, that approaches you take to structure-based setups. And if you're going to go and test any of these, let me know in the comments. All right, so that's it for the video. If you enjoyed it and got value from it, please let me know in the comments. Let me know your approach to entry techniques and order placement. I'd be interested to hear all the different community techniques and ways that you get involved in the markets. And let me know if you want to hear any more topics covered on this channel. I'm going to be doing a part 2 of the trading for beginners, so stick around for that and make sure you're subscribed, and I'll catch you in the next one.